All right, everybody, welcome to the Master Passive Income Show. Today, I'm super excited that we are going to be learning how to use our self-directed 401k, IRAs, using that so that we can actually have control over everything. Now, as far as terminology, I brought an expert here on the show with me today, Brandon Walsh with Rocket Dollar. Thank you so much for being on here so you could show us how we can use our IRAs, our 401ks, and be self-directed so we can control everything rather than having somebody else control us. Thanks for being on the show.
Thank you, Dustin. Master Passive Income is always one of our best partners, so really excited to be on here. Many of our real estate investing customers constantly go to Dustin's website to get educated how to own a single family home, really figure out how that fits inside of the self-directed IRA. And often his people that use his education are consistently some of the best educated customers that come to us. It makes my job really easy as a salesperson. Sometimes people barely ask a question, just a quick one or two, and they're off to purchase account and off on their way. So Dustin invited me today to really talk about some really awesome things that you can do with a self-directed IRA. Dustin covers single family home investing backwards and forwards all around on his website, his education, his podcast and content. And he said, hey, a lot of my customers, they love the real estate, but they've also been asking about other types of asset classes. How does that work in an IRA? So what we're going to do today here, we're going to talk a little bit about real estate, kind of expand that past the single family home, what you can do with self-directed IRA or solo 401k. And then we're also going to expand into some other asset classes like startups, precious metals, cryptocurrency, or even like a private investment fund. What does Rocket Dollar offer? We offer a self-directed traditional IRA, a self-directed Roth IRA, and a self-directed solo 401k. That's usually for self-employed individuals and really powerful for some real estate reasons that we'll get into. We have a few other specialty IRAs, but that's kind of our bread and butter, these three products up here. And what our motto is kind of no taxes. We have a lot of alternative investors that they've explored real estate investing or these other assets, but a lot of times they get killed in taxes in those accounts. Our accounts help you get the same tax breaks that you get in stocks and bonds with real estate, precious metals, cryptocurrency, startups, other assets, aggressive assets, and sometimes really safe and yield-bearing investments. So Dustin knows one of these really well on here. We've got all the types of assets that someone can do in a self-directed IRA or solo 401k. Top one of our biggest asks from customers every day is real estate. Dustin's doing education. That's a whole industry moving real estate investments through IRAs and getting that great tax benefit. Sometimes I run into real estate people, they call me on the phone and they find out for the first time, Dustin, I don't know if you've ever encountered this, they've never heard of doing real estate investing in an IRA and they're a little bit mad about it. They've never heard about it.
I definitely get that all the time because what people do is they realize, hey, I have all this money sitting there and I'm trying to invest someplace else. And I have, just mutual funds or 401ks and IRAs. And they're starting to realize now that they can actually use that. Now, the caveat is you can't touch that money when it comes back in. Like if you make money in your real estate, it goes right back into your 401k. You can't touch it yourself. And so that's the one little caveat. But other than that, man, you save that for retirement. Instead of having somebody else literally manage everything, you are the one in control, which is what I absolutely love about having a solo 401k or self-directed IRA.
And, when I hear real estate investors, kind of like the one big tool they have, that 1031 exchange. That's like the one thing you can't do in a retirement account. However, there is a world of tax advantages that you can get through these accounts and yet really expand your creative real estate investing. And so we have a lot of investors come to us that just get really excited about what projects they can do in real estate in a self-directed IRA, solo 401k. So some of the other assets that people also don't know you can do is private equity or a hedge fund. This could be a great opportunity, great money manager, but sometimes, maybe they're just not approved at Merrill Lynch yet. Charles Schwab, they'll offer this sometimes to their very top level customers, but some of these investments are really difficult to get. A loan, a debt, a promissory note. This is, something people in America do every day. Loaning a business or maybe a real estate developer money because they believe in their project. They think, hey, I can get a nice return. This person needs some capital. You can actually do that to a specific private business or person through a self-directed IRA. Venture capital, startups and crowdfunding. This is typically, obviously not what people think of as a retirement asset. But Rocket Dollar customers love that there's a tax advantage. So sometimes they'll take a small portion of their portfolio, put it into a startup or venture capital fund that they believe in. And every time, let's say if you have a startup blow up, you're getting some very nice tax benefits on that, because you hear about startup employees, startup investors, they finally hit their big break, then they have a giant tax bill to take care of. Very popular with our customers right now, red hot. As of this morning, I think Bitcoin was somewhere around 51 or 52. It could obviously be different. Very high flying asset, but Bitcoin and digital assets and cryptocurrencies. This is by far the newest asset that we have. And part of the self-directed IRA is that when a new asset comes onto the market, you do not have to wait for traditional finance to start accepting it, to do it in an IRA or solo 401k. So investors have already been doing crypto activity in self-directed IRAs for quite a while. And we've been hoping to try and make that easier through our account structure. Precious metals, another one of the kind of foundational things that started self-directed IRAs, along with real estate. Big favorite of many gold investors, silver investors. For thousands of years, there has been value in precious metals. It is still no different right now. So people a lot of find this as a defensive asset, maybe something that moves different than the stock market, or just provide some value at a certain time. They think, hey, this is a great time to be in metals, maybe move a little bit from other assets into metals, and they can bide their time and figure out what assets they want to enter after that. Farming assets, assets in rural towns, sometimes investing directly in harvest, crops, livestock. These are things that a lot of Americans, they've never lived in the city, but they're a damn good businessman or woman in their own town. And a lot of it's just frustrating is, Fidelity is in Boston, a lot of financial companies in New York. They're never sometimes going to notice a really good investment opportunity, maybe at a farm next door or a small business in a town near you. So we have some people that, one of the best performing people in 2019 had about 30 cattle in his IRA. He beat almost anyone as far as performance. And that's because he is an expert at cattle and livestock. And who should tell him that he cannot invest in retirement in things that he's very skilled at, can perform well at. International investments, something, you can get international funds, but they're usually extremely broad when you access an international fund or a stock or bond. It's the top 5 or 6 companies in another country. So sometimes, again, you have a relative or you come, maybe you're an immigrant to the United States, you have assets in your old country or home country or other countries you visit that are very powerful that Americans are currently ignoring or don't have any exposure to. Through a self-directed IRA, as long as you're following all the U.S. laws and regulations, you might not get tax shielding in that country, but you can get tax advantages in the United States for your investing. And the last big point and more, with a checkbook IRA, which I'm going to get into in a minute here, you can access almost any type of investment, whether Rocket Dollar has heard about it or not. As long as you're following the IRS rules, you can really flex your investment muscles, brainstorm, and say, hey, this is a really creative new investment, but I know it's going to be good for my retirement account. So I got a diagram here of the basic self-directed IRA, and this is what's called the Checkbook IRA or IRA LLC. Dustin, I know you're really familiar with this structure. A lot of master passive income.
We use that all the time. Absolutely, yeah. We make sure that we control our assets, which is you buy one rental property, it makes you $250 a month in passive income, but you have expenses that you got to have come in and out. And so that's absolutely what we use that. And all the money stays in our IRA so we can have it for retirement as well. And it grows tax-free. So it's just a great way to actually invest your money.
I just want to say a little bit about Rocket Dollar. We have a discount code here for master passive income customers. Rocket Dollar, we try to offer this checkbook IRA at a much cheaper price. Sometimes it's up to a third cheaper than some of the competition out there. We try and do it the same way every time, just that IRA, that Colorado LLC in the bank account. I can talk about how you can, if you ever have a question about how that Colorado LLC works in a certain state, feel free to call me and how that would be structured. So for $360 and $15 a month, you get an IRA, an LLC, and a bank account relationship with a bank that are a partner that understands real estate and all these different alternative assets. So on the right here, you'll see kind of some of our competitors' fees, which can get pretty long and crazy sometimes. Rocket Dollar was started because we feel a lot of these fee sheets were too ridiculous, and they're restricting people from being able to invest in alternative assets in their IRAs. So with the Master Passive Income code, you can click Dustin's. Make sure to click his link so he gets credit there on a Master Passive Income site. But for you to get $50 off, you can enter Master Passive Income in the referral code box right before you get to our final purchase at Rocket Dollar. That'll get you $50 off in your account. And hopefully, I'd love if you had a conversation with me and Dustin, all the great education that he has. And so many people, obviously, you'll see a couple, the 3 boxes here representing the self-directed IRA, what Rocket Dollar creates for our customers. Many people are used to just a standard IRA, a traditional Roth IRA that they get Fidelity, Schwab, and these are great stocks and bond companies, and they've been experts at that to offer a great product for a long time. But some people say, hey, Fidelity, can I get this real estate investment in my IRA? It's, maybe it's a real estate fund or it's a property. And Fidelity is pretty much always going to say no. They just say, hey, this is not our thing. We do well in stocks and bonds. We know our customers do well in stocks and bonds. We're going to kind of stay away. It's like too much compliance for us to help add this investment. It's not that Fidelity is not able to add that investment. Someone like Fidelity, these big companies did do alternative self-directed investing for a lot of their higher level clients. It's just a lot of times it's troublesome for them. They're not structured for it. It's a little bit of a time waster because they just say, hey, we're not equipped for this. So go somewhere else to go do that type of investment. And you'll see the LLC in the bank account here, which I'll get into in just a second. We have competitors that use the direct custody structure, just like Fidelity, Merrill Lynch, and all these other companies. They are more alternatives friendly. They will let you get into quite a different alternatives. And Rocket Dollar offers that structure to some customers in a limited fashion. However, when it's a single family home investment right in your backyard, when it is a real estate developer down the street, when it's a private startup that is very strong and promising, but maybe they haven't proved themselves to the entire world. You and all your buddies know that that is a great investment. However, a custodian does not. This is where the LLC and the bank account comes in. You'll hear a lot of terms about this. IRA LLC, checkbook control, referring to the bank account, a checking account that you can write a check, send a wire, send money to an investment. So why does Rocket Dollar have a Colorado LLC and a bank account? The Colorado LLC, we put the customer in charge as the manager of their LLC. They get to manage and decide what investments are downstream in their IRA. Whether that's a single family home investment like Dustin, I hear, a hotel investment that I've got in the chart here, or a private equity deal. And again, the constant thing I try and drill on the customers, whatever you think is allowed by the IRS, you can do it in a self-directed IRA with an LLC and a bank account. And Dustin, why, with a single family home investment, your expertise, why is that bank account so powerful for a customer to have?
Well, because there are so many different types of expenses in your business that would come up that you might need to either have a contractor go out and do some work, and you don't want to just get any contractor. You want to have maybe multiple contractors. You can actually have checks go out from you, or basically pay out of that account to different contractors instead of having to worry about getting a whole loan or something like that. So it is so much better than getting a big loan. You could actually have a little bits of money coming out at a time.
Yeah, and so that this bank account in real estate, it just allows a lot of control over the daily transactions, which some investments don't have many daily transactions. Like sometimes you just send money to a fund and you forget about it for years. Or real estate property, you have transactions every month. It's a rent check. Bare minimum, you're going to have at least one a month, a rent check coming in. If a custodian is processing that, and they're also processing contractor checks, repairs, the sink broke, you got to get a new washer dryer. These little things can add up. A bank account inside of an IRA and a checkbook IRA really helps you distribute money as quickly as possible. Your contractor needs to get paid. What if the custodian hasn't paid your contractor yet? They're obviously not going to be happy. They might stop work and say, hey, what's up? I haven't got my pay in 2 weeks. Your rent check, going back the other way. What if the money comes back from your real estate investment? What if the custodian hasn't processed your rent check yet? And these are complaints we've heard from customers when they try to deal with more direct real estate. They love the bank account and the LLC. They say, hey, do I have to do more work? The customers love it. They get to handle all the transactions going back and forth. They get to make sure everyone's paid on time. They get to make sure their IRA is paid on time. And they also don't have to worry about the custodian slowing anything down. So to review here, the really three biggest things. What does the LLC and bank account offer? One, more control over your investments. Two, no deal review holdups. If you've got a property and you want to move on it, if you've got an investment that's a little new, you can send money right that day and sign as the LLC manager to approve that investment. And no per investment fees. This is a really great efficiency that Rocket Dollar has offered. It says, hey, if someone has 40 investments or 15 real estate properties, they still pay the same $15 a month to us. Since they've got an LLC and a bank account, it allows a lot of efficiency to move money in and out very quickly. Since Rocket Dollar doesn't have to deal with it, since the customer's officiating all those quick transactions when they need to, we don't have to charge every single investment a customer does. Just quick reviewing the stuff of an LLC here to really drill down on it. You are the manager of the LLC, not the custodian. If you have a solo 401k, we'll show that structure in a little bit. You're just the trustee. You're the trustee and you're in charge of those bank accounts. This means that you can select almost any active passive investment and avoid the capital gains on it. I drill this down because often people go through an entire presentation. They love the idea and they're like, well, I'm still going to get capital gains in my real estate or cryptocurrency or no capital gains as long as it's in a traditional or a Roth account. You can access alternatives that move differently than the stock market. Obviously our stock market is very volatile. It's mostly been good volatility, but retirees get very nervous around that time, seeing all that volatility. And you decide when to send the money. When you see an investment, you get to move. And with that checking account, the checking account almost works like a money market. Think of it like in your stocks, you keep money in your money market. You say, hey, there's a new stock coming out. I really want to jump on it right now. You buy it, and then that money comes out of your money market. Think of that checking account like a money market. You can access at almost any time, except it's available for almost any alternative investment. So Dustin, with this single family home investing, why do your customers and, the people you educate find that so powerful to do in an IRA?
For a single family home, it's because as we are having as much control as possible, see, as investors, we want to have options. We want to be able to be proactive. We don't want to just say, give this to somebody and you try to make me money. No, we want our own options to be able to do whatever we want with our money. And so if you have a deal that comes up that needs a little bit of money and then another deal pops up, you don't have to, take a whole lump sum, or you don't have to go after somebody else for private money. You can tap into your own solo 401k or the IRA. You can tap into those to buy properties and also to purchase properties, and all that money goes back in so that when you retire, you have even more money that is going to be for your retirement. And the biggest thing is, like you said it, Brandon, you have independent control over everything. And I personally love not having to depend on anybody. I'd rather do it all myself so that I know I'm going to be getting a good return and actually protecting my assets.
Yeah. And so a lot of real estate investors just find power for this. We have realtors come to us all the time, people that have they already invest in a couple of properties, and they often find, wow, I have a lot more capital left in my IRA from a couple different jobs. A lot of people even remark real estate as almost their main job. Their W-2 job is kind of their side thing. And they're working it, but really what is that funding? That's kind of funding their little mini real estate empire. And what this does, you can't buy the same properties that you own personally. You have to buy fresh or new, different properties. But you can go out with this self-directed IRA structure, use the LLC structure, and go invest in properties across the United States, or LLCs that own real estate across the United States. Using that bank account and kind of with the checkbook control sides we talked about, managing that with the money coming out of ACH, wires, checks, paying all those people you need to pay to operate and manage a real estate property. So I'm quickly going to go over the solo 401k structure here. And the reason why we're talking about it in real estate, it can work for a lot of different assets, but there's a couple of reasons why it's very powerful for real estate. Look at all of these different types of properties that you can go after. You can do this in a solo 401k or an IRA, but the solo 401k has a few great tax advantages we'll get into a little bit later. So here I've got vacation properties, local commercial properties, apartment buildings, multifamily, office buildings, which hurting a little bit this last year, but has sometimes been a very strong and consistent investment. Single family home properties that Dustin educates people every day. Real estate funds, getting exposure from a manager to different real estate funds as a passive investor. Hard money lending, are doing those promissory notes. Maybe, typically to a real estate investor. Again, this real estate comes up again and again. It's a very strong investment inside of a retirement account for many reasons. People have valued real estate in the United States. And then an international property. Our customers have properties in Mexico, in India, in Europe, all across the world where they feel that's a strong property to own. All right. So, Dustin, I have a common question here. What if your retirement account is too small to buy a single family home property? How often do you run into that question?
I get it all the time. And the big reason why is because, not a lot of people have. Some homes you can see buying for like 50, 60, 70,000, but some homes are 120, 150, $200,000 houses. And you get that question because they're like, well, I don't have enough to just buy it outright. And they're scratching their heads like, how can I actually use it if I can't buy the house outright?
Yeah. And so here I have a few options. And then what Dustin talks about, maybe you can get loan or financing for a property, which we'll get into in a second.
Oh, yeah.
So I constantly get this question, and so what do I do? I really want to own a single family property. I like massive passive income. I want to have a property or two in my, but I like real estate. So I say, hey, have you considered doing a promissory note or hard money lending? There are developers, especially in this real estate craze right now, there are developers all across the United States that need capital, need short-term capital. They might be right down the street from you. They might be in a Zoom networking group or meeting for coffee in a mastermind right down the street from you. Start networking. If it's in these more Zoom heavy times, start looking at Facebook groups, start looking at who has a weekly or monthly Zoom meeting. I often find that these mastermind and networking groups, they're a mixed bag, but if you find a great one, you can get catapulted. You'll get great connections. You'll get investment opportunities. You're gonna get help on your own deals. You might even get co-investors. Two investors can invest in the same real estate project, or two IRAs can also invest in the same real estate project. It is also a lot easier to invest with a more business style partner than maybe a close family member like your spouse.
And Brendan, I think you also mentioned doing something like a promissory note, which is terrific. I have so many students that are buying properties, and there's more properties in deals for them than they have money. So they're looking for other investors, and a great way to tap into your 401k as opposed to going and getting a loan. But you can actually lend your own money to other investors, like my students. You can actually lend money to my students, get a great return on it, put the money back into that solo 401k or solo the IRA. You can do that and still make money. So there's another great way to just get into real estate investing as somebody with a promissory note.
Yeah, and this is one of the most successful ways I see people move from a smaller retirement account up to the ability to buy their own single family home. They usually end up liking both even. They'll still do a mix of promissory notes, but they'll finally say, hey, I finally got enough returns after doing a few notes to buy my own property inside of my IRA. There are real estate crowdfunding platforms for smaller investments if you're looking to do micro investments. There's real estate funds and REITs. And a nice thing with a self-directed IRA is a lot of the REITs out there in the publicly traded markets, they just move the same as stocks and bonds. It's really frustrating to investors. They get a REIT at TD Ameritrade or Schwab and they're like, hey, I'm investing in real estate. And let's say real estate in a certain area is just killing it. And they see the stock market goes down and their REIT goes down. Why does that happen? I mean, because real estate, the traded REIT funds they're getting traded on the stock market every single day. And they get vulnerable to some of those short-term market fluctuations, which can be really frustrating as an investor. So a self-directed IRA can get you into a private fund or maybe a real estate investor in your area that has a fund that totally ignores this stock market short-term movements. Typically, from my experience, it's usually going to be a $50,000 minimum. However, always talk to the real estate fund, form a relationship with them. I've seen plenty of that will decrease their minimum, sometimes as low as $10,000. And this can be a great way, if you have 50, if you're in a more expensive property state, you have 50, 60, $70,000, which a lot of retirement investors do when they get up there, use that to invest in a real estate fund. Maybe when that fund exits in a few years, you're gonna have more capital to buy a property. And the last bit is use a non-recourse loan. Dustin, you talk about this all day long with your students, don't you?
Oh, absolutely. 100%.
Yeah. And, a non-recourse loan basically means it's a little bit different than a traditional mortgage. It is a loan where only the property that you signed the agreement for is at stake. So your personal credit, your personal car, personal house, typically this is, signed off of, hey, if I mess up as an investor, the bank can take these assets and that's going to make them whole again. With a non-recourse loan, only the retirement property, only the property inside of your IRA that you signed the agreement for is at stake. So, some people say, hey, that's a benefit, but also remember, the bank's taking more risk. So they're usually a bit different percentage points. Sometimes they're a few points higher. And, you have to make sure you've really got your ducks in a row when you're asking for a non-recourse loan. If you go to your standard mortgage guy or gal, they'll probably say, I'd love to finance that property for you. But you have to be careful and say, hey, this is going to be a non-recourse loan. Is that okay? Not all lending providers will do that. I'm sure Dustin's got contacts with them. Our partner bank does these non-recourse loans. And just for perspective, the bank usually likes these to be a little bit more rent ready. They like it to be a little bit less fix me up. They want to make sure it's like a steady property that you can turn around and start renting very quickly, because since they can't rely on your other assets if they have issues, they need to make sure that they feel confident embarking in the beginning of the deal. Dustin, anything more to share about, your students deal with these non-recourse loans every day?
So what it really comes down to is, with that not having a recourse loan or having a non-recourse loan, it really just doesn't put the onus on you and your personal credit and everything that you own, which is great. So usually it just comes with a commercial loan. You would have it in the commercial loan in your LLC, and you would have it as non-recourse on yourself. So I personally encourage anybody and everybody to get there. It's not, don't necessarily start there as a beginning investor. Jump right into a non-recourse loan. You're not necessarily able to do that. You possibly can. It's just a lot more hurdles to jump through. But usually with commercial loans, you absolutely want to have a non-recourse loan because they go after that specific asset as opposed to everything else. But yeah, we try as best we can to mitigate taxes. That's why I brought Brandon on here, because with Rocket Dollar, we mitigate so many taxes, just like in regular investing, 1031 exchange. We have tax benefits by running a business. We have so many great reasons or ways to get and mitigate taxes. This Rocket Dollar is just another fantastic way to make sure that you're making money and spending less in taxes.
Yeah. And that's Dustin's mentioning the taxes here. I have a little note here about the solo 401k. Kind of the secret weapon is that a non-recourse loan can possibly bring some taxes in a self-directed IRA. So you have to be careful to kind of do your research, maybe visit with a CPA. Rocket Dollar has a CPA. We can refer anyone that knows this stuff backwards and forwards, because there's a certain tax called UBIT and UDFI. And I say it's something to be aware of, not afraid of. It's a tax made because the government wanted to make sure that you couldn't hide too much business activity inside of a charity or a retirement account. So these taxes are kind of old school and they're a little bit high. You have to make sure you're able to write them off if you do it inside of self-directed IRA. So a non-recourse loan should not be taken lightly, but it is a great tool, a great weapon to expand your IRA, get it out to a higher level asset, maybe a higher level property home, which can really work out for you in the long term.
And it absolutely must be said that Brendan and I we're not accountants, we're not lawyers, so definitely check with them. We're just relaying information that we've been told by our accountants and our lawyers. So when you're doing your own due diligence, they're going to help you. Your own accountants and lawyers will give you the best direction. We're just helping you out getting there so you know the right questions to ask.
Yeah, and I have a lot of people say, hey, I'm in California. There's no chance I can ever get a property without a huge loan. Have you considered a property in Ohio or Michigan? I talk to investors in Florida, Ohio, and Michigan that it's really funny to hear the very difference in how achievable it is to buy a certain rental property in different states. Just consider something. Maybe if it's really tough to buy your first property in cash, which is usually your first adventure in a self-directed IRA, it's a little easier to buy it in cash than to get a non-recourse loan. So maybe think outside the box. I know Dustin does education. What if the property's in another state? There's ways to get over that hurdle and that feeling to really get a strong property, even if it's just a little bit outside of your local wheelhouse.
Well, that's absolutely something we love to do here at Master Passive Income is find out of state properties because not everybody lives in a good investing area. When I got started, I lived in California in 2006. I wanted to start investing. Well, the prices were just going up and up and up. I just like you said, Brendan, I actually started in Ohio. My first property was in Ohio, then bought more properties, then branched out to Texas and Arizona. And I have students literally investing all over the country. I found that the Midwest down to the Southeast still has some really, really inexpensive homes that you can make at least $250 a month in passive income. And that $250 a month in passive income will go right back into your solo 401k or IRA and continue to grow that so you can even buy more and more properties.
Yeah, and just a great little story. We had someone that they worked with their grandma to buy a real estate property in her one of her IRAs. She uses that monthly income to live off of. Every single month, the rent check comes in from that property, and her being older, her expenses are lower. That basically pays for all of her basic expenses. And this is a really great way to get some really steady yield coming through. And the reason I have the solo 401k mentioned here, Dustin kind of mentioned about taxes and the loans. How much space do you have in your inside of your IRA? Is that a solo 401k is UDFI tax exempt, so unrealized debt finance income. Congress has just left this in there from one of the rules many years ago. So what does that mean for you? If you're self-employed and you're a real estate investor, if you get a solo 401k, one of the biggest types of UBIT, not all UBIT, but one of the most common types of UBIT that real estate investors run through all the time when they take out loans in their retirement accounts, like non-recourse loans, the solo 401k is totally exempt. So that is a great advantage to say, hey, I need to extend my capital. I need to go after a big property. I'm going to need a loan. I want to invest in a lot of real estate that maybe has debt or has loans out inside my retirement account. You should heavily consider to go through the solo 401k. If you have any self-employment as your spouse, think outside the box. You might already have a small business. You're just not calling it effectively running income through it as a small business. So this is something to talk to your CPA about, saying, hey, I have a side gig, I get paid a little bit. Can I turn that into a sole proprietorship or a little LLC or S Corp? Because then you get access to a solo 401k, and you'll also get access to that UDFI tax exemption. And again, like Dustin is saying, these investments, what's hit with UBIT and UDFI and what's not, it does vary. Usually if you're passive investing, you're a little bit more shielded from that, but active investors do have to worry about this. So talk to your CPA, check in your investments, make sure before you dive completely into an investment, you're checking in on what that potential financing or tax liability from UBIT could be. And with that solo 401k, you're getting that same ability to invest with a bank wire, checkbook, or debit card.
Brandon, now with a solo 401k and a self-directed IRA, we look at, obviously I love real estate, but there are so many other different types of things like cryptocurrency or promissory notes or anything else like that. So let's look at those other ones. So what else should we look at as a means to utilize our 401k ourselves to invest in?
Yeah, and we're going to talk about some of the most popular investments that Rocket Dollar customers are looking at right now. Real estate is always probably about a third of all of our customers that come in each month. We have a lot of other assets as well. So here I'm going to talk about cryptocurrency. This asset is red hot right now, and a lot of people think, hey, how does it actually work to use an IRA to get into cryptocurrency? Rocket Dollar uses that LLC structure with a bank account. And the advantage of this is you get to take your dollars, again, wherever you want to go. So you can use your LLC to sign up at any crypto exchange that will take you. You pay that crypto exchange fees. You do not pay Rocket Dollar fees. There are a lot of competitors that just have an IRA and they directly interface with some crypto exchange. However, you're stuck with them. You're stuck with that crypto exchange. You're stuck with their fees. If you're trying to move your crypto anywhere, usually you cannot. You're stuck in a very closed loop with your IRA. And, this has gotten a lot of customers pretty frustrated. They're coming to us and asking about fees. Sometimes to do a simple crypto trade, 5% or more. There's some more, reasonable ones at 1.5, but that's still 1.5. If you got that in your stock account per trade, you'd be screaming right now. And so a lot of people look and say, hey, what's another way I can get more direct control of my cryptocurrency? How can I be a little bit more free from the custodian to kind of do what I want? And that's what the IRA LLC or Checkbook IRA. So you'll see here, you see the bank account. You can move money into the crypto exchange that you've registered your LLC, and then that money can stay in the crypto exchange. At our partner bank, we have a great pricing agreement, so there's no minimum balance or activity requirements. Think again, that bank account, kind of like your money market. If you say, hey, I want to dump all of my money market into the crypto exchange, so it's ready to trade crypto at a moment's notice, you are free to do that. And you don't really have to bring the crypto back until you're going to distribute the dollars, or maybe you want to roll that money back to real estate or stocks and bonds or another type of asset. So again, what's the so what of cryptocurrency? If you get an exchange that can take an LLC, you can use it. When you trade crypto, it's just very important. A lot of crypto is very private, is that, it's all held in the name of the LLC. Just when we're talking with real estate, if you sign a real estate property and you put your personal name over it and you forget, you don't put your custodian's name on it, or you don't put your IRA LLC's name on it, if the IRS ever looks at that asset, they go, well, Brendan Walsh owns this. Doesn't seem like his IRA owns this. Same holds for crypto or any of these other assets. You can invest in a great variety of them, but you always have to make sure that's in the name of the IRA.
And that's a great point. So you're saying the clearinghouse, like let's say Coinbase or the organization that you're going through to buy the crypto, that needs to be in the LLC's name. Is that correct?
Yeah, and so Coinbase is very good at registering an LLC. Gemini, we have a partner with River Financial and ErisX, two exchanges that know how to take an IRA LLC and title it correctly. There's plenty of exchanges that will just take an LLC and they don't really know too much about IRAs. That's still okay, but the one risk is when come tax time, if you or anything were ever to come up or you ever get audited, there's a lot of tax enforcement about taxable cryptocurrency right now. You want to be damn sure that when any statements, W-9s, or anything that comes up, it is very clearly in the name of your IRA. Everything funnels to the IRA. If it's not, you can get a bit of a risk here, is that the IRS has to be assured whatever you invest with an IRA, it's clearly in the name of the IRA. That's what gives us and enjoys the great tax benefits of that. And if you do that, you get to trade crypto all with no capital gains. So we have some crypto investors that, this is the two biggest moments. They're usually one of two types. They trade very actively. They're moving crypto constantly. These investors really get frustrated. Crypto moves a lot. They pay capital gains every single time in a taxable account. That stacks up a lot. And it gets a lot of frustration. And then the other type of customers, they'll just buy and hold, the holders. They're the same in real estate. There's shorter term flippers and there's longer term investors. Those longer term investors, if they're in a taxable account, sometimes have had huge gains. And they look and they want to sell. They look at Bitcoin right now and they go, wow, I would love to sell a bit of my Bitcoin off, not all of it, but take some nice profit from that. However, if you're in a taxable account, every time you sell up your big gain, that capital gain can be very brutal. Inside of our retirement account, you do not have to worry about capital gains. So we've got crypto is constantly expanding as a newer asset class. There are now some people staking and lending out their crypto to companies to make use of it, which is turning crypto into an interest and yield bearing type of product. Certain websites will say, hey, these people need crypto so bad, whether they're exchange, they're traders, intermediaries, they just need to get their hands on as much as possible to help the crypto business and blockchain continue to do its thing. So you're actually able to lend your crypto that you buy to a certain company. It can be given out to people that really need it and are willing to pay a high interest rate for it. And then your IRA gets to enjoy that interest and yield of the cryptocurrency. And this is quite new and popular in the last 2 years. Dustin, it's almost like real estate. Real estate investors are often looking for yield. This is a way to find yield inside cryptocurrency.
That's pretty amazing. Now, is it basically if you put your money into a clearinghouse like Coinbase or something like that, you can get any crypto that they have on their exchange, right? Or you can just basically utilize them. And if it's on there, you can buy it. Is that correct?
Yeah, so you can buy it. You can buy it at places like Coinbase. And then there's also places now like BlockFi is a really popular one. And our partner Celsius Network is that, hey, you bought this crypto. Maybe you're just letting it sit. We have people that need this crypto so bad. We need, they have such high volumes of transactions. They'll say, hey, if you bring it to us and just, park it inside of our staking platform, we will pay you an interest rate. And it's just turning a, very high flying asset that's, honestly, again, with retirement, crypto is very volatile. Consider the risk of that with an advisor. This is usually a small part of people's retirement account when they come to Rockefeller. Say, hey, real estate sometimes real estate investors will have the real estate portfolio cover almost their entire Rockefeller portfolio. With cryptocurrency, usually they're just bringing us a small part of their portfolio and saying, hey, I want to play with this. I want to make this a part of my portfolio. I know that anything I put in here is very high flying, also very risky. And staking is just very popular in 2019 and 2020. It's continuing to grow in popularity in 2021. It's a way to turn this very high flying, very volatile asset into something more yield based. Obviously, still risky, but something that has a capability much more like a yield bearing investment.
Well, and so most people, when they buy, let's say, Bitcoin, they're hoping that the value goes up. Well, you just hold on to it and hope the value goes up. But if what you're saying, and if they do what you're saying, they would actually make an interest on just holding it as it goes up. So think about your own private money. You put into, let's say, a CD or a money market account, or you buy a bond or something. You're holding that money. Eventually, the just appreciation of the value, or sorry, inflation will make the value of the dollar go up. And you're making interest on the same thing. Exact same thing when you do with Bitcoin or any other cryptocurrency. You're parking it there. It's going up in value, but you're also getting interest on that money, that Bitcoin or Litecoin or whatever it might be, that's being sent someplace else. And so somebody else is using it. You're making money both ways, as it goes up and every single month as it's used for interest.
Yeah, and this is just a really, this is just speaking to how exciting kind of new crypto is as an asset class. Is they're coming up with different ways to use the asset and make use of it in all financial areas, kind of recreating some really powerful parts of old finance and also bringing new parts to finance. So you can also invest directly into a blockchain technology or startup. In the Ethereum landscape, Ethereum is really all about providing tools for companies and financial services and different things using the Ethereum blockchain. The amount of companies using that has just exploded. There's consensus in New York. There's just thousands of companies that are creating new technologies using this blockchain. I'm not going to get into the entire bit of what blockchain does here today, but just think of startups are making use of this technology, kind of expanding it and flexing their muscles and say, hey, what can we do with this asset? How can we really prove something with this? So you can invest directly into a startup, write a check to that startup, and you say, hey, I really love this promising technology you're doing. I'm going to invest directly in you. And I'm going to do, obviously with a startup, these are higher risk. So I'm going to do it with a small bit of my retirement account. If that blows up, again, no capital gain. And just storing value. A lot of crypto investors, they're saying some of the same things that when I talk to gold investors about. Maybe it's inflation. Maybe they're looking at stable coins. There's just a lot of different assets out there, and some of them say, "Hey, I store a lot of value in the U.S. dollar. Maybe I store a lot of value in real estate. Maybe I just want to put a little bit in here, just as another bit of diversification of where all my value is held." And again, with storage, a lot of crypto is really private. Some people will take it fully off exchanges and kind of away off the internet, very kind of far away from traditional finance. Just know if you do any of this, everything has to be in the name of the IRA LLC. And again, you have to prove that it's in the name of the IRA LLC. With a real estate property, there's a deed and title, a lot of great information to back you up. With crypto, sometimes it's a lot less. So sometimes you might need to rely on an exchange like Coinbase, Gemini, Airsex, these different exchanges to say, hey, this is the crypto that I own. This is where I bought it.
And so, yeah, when you're using the Rocket Dollar, using your solo 401k, your IRA to be able to buy cryptocurrency, it's just a fantastic tool. And I love, Brendan kept nailing it over and over again. You're not going to be paying capital gains on it because it's inside a retirement account. It's so great. So you guys definitely, I personally suggest using Rocket Dollar, and check in the description. Also, I have a promo code. Use Master Passive Income. Gives you a discount on using Rocket Dollar. They're a great service. I have lots and lots of students that are using Rocket Dollar. So make sure you utilize them. Check in the description for all that. But yeah, that was great. And we're talking about precious metals and how we can use a solo 401k or your self-directed IRA, basically your retirement account, to buy precious metals. Brandon, from Rocket Dollar, I'm so glad you're here. So tell us about the precious metals and how we can actually invest our money, our retirement accounts. It just seems like weird that we could do that. We're used to just putting it in mutual funds or whatever, but this sounds like a great opportunity.
Yeah, and so we have a lot of precious metal investors. Precious metal is kind of one of the foundations of these self-directed IRAs. When self-directed IRAs first started, what were people investing in? Real estate and gold, silver, and precious metals. This has been an asset for thousands of years. As precious metals continue to get used in different, tech projects, physical engineering projects, so much of that precious metals is really still useful in the technology we use today. So when you're able to buy precious metals through a retirement account, and a lot of people love this Checkbook IRA LLC structure because, again, they get to pick who they work with. If they have a certain precious metals provider, trust company, a vaulting service, they get to decide what service they go to, what vaulting fees they pay, and where that precious metal is stored. As long as it's not in their home, they can store it at a local bank or maybe a vaulting service in their state. Because some people feel very confident about Switzerland, but they say, hey, that's really far away. If something happened, there was no way I'd be able to ever access that. So, vaulting in Oklahoma or in Delaware, or maybe a vaulting service in your home state, you can say, hey, I own precious metals, a store of value inside my retirement account, and I also have a very tight eye on where it is and where it is located. And that makes people feel a lot better because it's a physical asset. Just like real estate, a physical asset they can touch, you can feel, hey, that is in the vaulting service an hour's drive away, or in the safety deposit box in a bank. And a physical asset in our age, the amount of money supply just keeps, there's a lot of money floating around. People sometimes get nervous. They say, hey, I want to store value in something I know that can't, really hard to be deflated and has always stored a lot of value. And I also know that there's no way a company can flub a number on it. It's a bar of gold. It is somewhere. An accountant can clearly say, look, this bar of gold, I just audited the vault. There's 20 bars of gold in this section of the vault. We know that for sure. Everyone can see it with their own eyes. Just that makes people feel very secure in today's day and age with an asset they can touch, they can feel and look at and say, my retirement is built on something physical and is going to be around no matter what. So what precious metals can your IRA own? The IRS has a certain list of what's approved. Gold, silver, palladium, platinum, and certain approved coins. You should just know that with the gold market, there is a lot of different precious metals coins out there. Some are approved by the IRS and approved as a valid store of value. Others are a little bit more collectible. The IRS has never really liked anything collectible. Artwork, Dustin's guitar on the back there of the screen, anything that you can touch or feel. Let's use Dustin's guitar as an example for the precious metals, is that if Dustin has a priceless guitar, they don't think he's really going to keep that in safekeeping for his IRA. He's probably going to show it off to his friends. He might play it on the weekends. He might say, look at, like, this guitar is 200 years old. Look how beautiful it is. I bought it for many, many dollars. I'm going to sell it for later. But really, he's kind of playing around with it in the meantime. So when it comes to collectibles or precious metals in the home, the IRS wants you to just keep a little bit of separation for it. They don't want you a gold coin that just looks fancy. They want you to keep something for your IRA, just for your IRA, just for investing purposes. So you have to keep these coins out in a safety deposit box. And you have to make sure to look carefully through the list of approved IRA coins, that it's one of the standardized stores of value. Don't be looking for collectible coins, because you could potentially buy that could be an IRS prohibited transaction. However, there's a lot of precious metals dealers that are so used to dealing with IRA investors, they know this stuff backwards and forwards. If you talk to a vaulting service or a precious metals buying service like AppMex and our partner One Gold, They know the stuff. They know how to deal with IRAs. They're going to know exactly how to help you guide through the basics there. They also know that law backwards and forwards, and also how to help you store it safely. Somewhere that you can feel confident. The physical gold is there. It's audited every year. If you buy the gold, some of these services will also let you take physical delivery of the gold. And that is just part of the consumer confidence. They want to make sure you know that the gold exists, that the precious metal is there. If you do that, you cannot store the gold at home. Whatever precious metals you get or receive, if it ever comes to the home, you should try and get it to go directly to a safety deposit box or a vaulting service. But if you ever do take physical delivery, you should get that precious metal to a vaulting service as quickly as possible.
Yeah, I'm glad you said it, because that was kind of going through my head. Because when you normally buy gold, you can buy it online, or you have somebody that's a dealer really, really close to you. There's lots and lots of money changers here. So anywhere in the world. So a lot of people are selling gold and silver. And so let's say we got our Rocket Dollar account and we have that checkbook control, and we actually write a check and we give it to somebody that's a local, coin dealer or gold or silver dealer. We take that and we go right to the bank and put it in our safety deposit box. Is that kosher for the IRS?
And yeah, it's really what the IRS is. They used to let people store gold at home, but just like the collectibles, like that guitar example, they found a little bit too many were just cutting corners on it. There would be the IRA officially on paper would say there's 5 bars of gold. The IRS agent would audit someone, they open the safe, and all of a sudden there's 8. And so this weird discussion, awkward discussion suddenly starts. Where did the other bars of gold come from? These are not in your IRA, are they? Or which are the 5 from your IRA and which are the 3 that are not in your IRA? So you really want to avoid anything like this ever happening. Store gold with a qualified custodian, vaulting service, or a safety deposit box. You can read through those rules both online and with the IRS rules out there. You really need to make sure you're educated on those. If you're just vaulting with a vaulting service, you don't need to worry too much, but especially with the personal transactions. Again, this is an area of self-directed IRA can have a lot of benefits. Dealing with someone in your local community, getting a great deal on something that is far away from New York and Boston, but has a lot of value in it. So you can make those purchases with your IRA. Just be careful to follow all of the gold rules around precious metals.
That's great. So with precious metals, it's a great way to store the value that you've already created. So let's say the money that you already have, you're locking it in, because we know there's going to be inflation over time. Money's just going to get inflated, and so it's not going to be worth as much. But if you buy gold, silver, or other precious metals, it's literally locked in at that value. And as like I said, gold goes up, let's say it goes to $5,000. Well, if you buy it at $1,700, which is $1,750 right now, it goes up, you still have that value of what you paid for it then, but the gold is still worth it. So I personally think utilizing Rocket Dollar, utilizing a 401k, solo 401k and self-directed IRA is a great way to buy and hold precious metals.
Yeah, and the precious metals market, people often look at this as a way to get away from an asset. Like the stock market moves in a certain way. Let's buy precious metals that moves a little bit differently. Sometimes gold and precious metals track the stock market, but usually it is moving a bit differently. And again, like Dustin is saying, that's a great way to store value. There could be many terrible things that happen across the world. We will still, as humans, find value in gold and silver and other precious metals. And that's just that confidence that if you're putting your IRA in something, people just want to be confident. They want to know that it's there when they retire. Precious metal is a great way to diversify and know, hey, I'm storing some value. I'm going to have the ability to sell this as an asset, no matter what, if inflation, the stock market moves. Gold is always going to have a solid value as well as silver. So we're talking about private funds and startups, something that you can fund with your self-directed IRA. I kind of put these together because usually people think about like an angel investing or a venture capital fund, a kind of going straight to the business, straight to the source of the investment. Maybe something more similar to like a single family home, or going to a money manager, maybe something like a real estate fund. So with a self-directed IRA, that LLC and that bank account, you see a strong startup, a strong new company in your area. And when I say startup, I mean all businesses. I just don't mean tech companies. You could see a brewery or distillery. You could see a private company. You could just see a franchise in your area. You can write a check to a private, new or mature business. You obviously the risk level is different there. New business is usually a little riskier. A more experienced, bigger business has less risk, less return, but more steady returns. So you with your IRA get to write that check directly to that company, not an IPO, not public markets, to a private company. And here is where a lot of angel investors, private business investors of all kinds will either invest in single businesses or a fund, a collection of businesses in order to get value. So, sometimes people think of a startup, they think of tech startups and boom bust in Silicon Valley. You can definitely go for that in an IRA. Usually people sometimes go in a Roth IRA and they do a small section of their retirement account. Very small because they know, hey, this could be a big risk that I'm taking. Other people say, hey, I've known these businesses for a long time. This might be a fresher, newer business that needs investment. However, this is a proven business model. I know they're going to do well in my area. I'm confident putting a chunk of my retirement account into this asset. So again, with the LLC, the checking account, you can write that business, that startup or that private business, and this might be a business that I've seen this both in cities and smaller cities and rural areas. You see a business owner and you say, this person's a very strong business owner. However, someone in New York or Boston, Austin, Texas, or Silicon Valley, they're just not paying attention. They're not getting as much investment. And you say, look, I'm going to give you a check because I believe in you and I know you're a strong investment for my account. So this allows you to have a much more freedom and kind of look at overlooked investments or very early stage investments where kind of some of the most aggressive returns and risk can be. You can select almost any fund or company that you're not closely associated with. You can invest as a startup, as an angel investor, which I kind of mentioned.
Hold on. When you say not closely associated, so like a family member, can you give money to a family member for their business?
To some family members, but not others. So there's a giant family tree here in the self-directed landscape. Anything vertically is usually prohibited. So that means your kids, your parents, your grandparents, your grandkids, and your spouse. And usually anyone directly related in-laws in that line. So vertically, very, very restrictive. We get a lot of people saying, hey, I have my parents' property. It's a great investment property. I want to buy it in my IRA. Or my son is starting a company. My daughter works at a really great company. You just can't do it. It's best to stay away from those companies you're closely associated with because there's a lot of rules. Laterally, it's very easy. You can invest with brothers and cousins and sisters and uncles. And the IRS really just doesn't want you to hide taxes generationally. So when you're investing in a private business, stay away usually from direct family businesses or any business if you own 50% or more of. So Dustin, I have a really simple oversimplification here, but gets you in the right mindset of what deals you can do and you can't do. I call it just a simple red light, yellow light, green light system. If you and your family own less than 10% of an asset or something you're doing with your retirement account, you can usually do it. As long as you're not the CEO or in charge of the whole thing, maybe you're the CEO of a startup, can't invest in your own startup. Stay away from it. But if you're below 10%, usually that's not where you have to check with a lawyer. You don't have to really think too hard about it. You say, hey, this is easy to do. I can do it with my IRA. Once you get over 10%, 11% to 49%, this is the yellow light territory. This is when you should be checking with the lawyers, the CPAs. You should be calling Rocket Dollar. We can't give full legal advice. We can give you some absolute basics, but you should really be going for the lawyer, a CPA, checking on which company you can go into and what you can't. This is something like if you're really closely associated with it, you sit in the board, maybe a close family member like your husband, kid, or parent sits on a board somewhere. You should be careful before you invest. You should really think about it and check on that deal. Could still possibly do it, but you definitely need to use caution. And then there's over 50% investments. This is pretty much cut and dry what the IRS calls prohibited transactions. If you own too much of a company, maybe you own a real estate property, you should not invest directly with that property. You should stay away with it in your IRA. You get a lot of people call us and they say, hey, I've got a great deal, And they talk about a family member, maybe their mom or dad that owns over 50% of the company. or a house, stay away from it. It's usually a prohibited transaction, and the penalties can be pretty severe inside of an IRA. This is like those little stock questions. You'll see at the bottom when you sign up for a stock account, it says, do you own over 10% of any specific publicly traded company? This is kind of what they're getting at. And with stocks, most companies are so big, you just don't have to worry about this. But with smaller investments, like a private company, a startup, a small fund managed by a few people, a real estate property, you just have to be careful on who owns that and check out on that. And I find that this mostly comes up with startup investing because, who are you investing in? You're investing in friends' companies. Sometimes you're investing in what's close to the family. So, Dustin, always be careful who you invest with. I'm sure some of your students, do they ask like some of these family questions as well?
Yeah, they definitely do. But at the same time, I always say, hey, Rocket Dollar has a lot of great resources as well as they're there to answer your questions. So definitely call them up. At the same time, talk to your accountant, talk to your lawyers because they're the experts. We hire them to be the expert to give us the right information so that you won't mess up. So yeah, as far as what I know very, very little. That's why I rely on experts to give all the great information.
So Dustin, we're gonna throw the family tree up here on the slides just because I think it's a really awesome resource. And you'll see the people that are okay to invest with, and you'll also see the people with giant X's in them. Typically, you have to stay away with investing with these people or stay extremely careful. This is, if you see someone you're investing in with an X on it in here in the family tree, you got to check with a lawyer, you got to check with a CPA. We can refer you one that really knows this stuff and can help you talk you through a deal. And maybe you can just do the same deal in a cash account. Or maybe you can restructure the deal, do something very similar and just say, hey, mom and dad, this is a great deal. Let's do this another time. We'll do it this is just going to be my IRA investment this time. I'm going to take you guys out to dinner. We're going to do another deal. We're going to set up one just like it, but it's going to be far away from IRA investments. And that's what you just might have to do. You just might have to change up a little bit about the structure of the family, and then you're totally fine again. So take a look at this family tree. You can feel free to call Rocket Dollar about the absolute basics. But again, we're not lawyers or CPAs. So we know the basics of the law because we do this every day. However, we're not a lawyer or CPA that can comment on your actual deal. You can select any fund or company that you are not closely associated with. You can do an angel investment check. You can invest into a private fund like venture capital, or you can pick a creative money manager, maybe like a hedge fund or a private equity firm. And these are firms that, Dustin, a lot of investment activity keeps moving towards the private markets. So the Rocket Dollar account, that allows you to get access to those private markets before 5-6 years later when you see a company IPOing. And again, real estate properties, so much of this is on the private markets, completely away from ever hitting something like the New York Stock Exchange. What a Rocket Dollar account does is lets you partake directly in your retirement account and those private assets. So what does this startup investing, private fund investing mean for my my retirement account or your retirement account using a Rocket Dollar account? Again, don't invest in companies you or your family already own or manage. However, almost everything else is fair game. The sky's the limit really here. If you see strong businesses and managers, feel free to go after that.
And so, Brendan, if we were to put our money into, let's say, a startup, and we start doing really well, and the business gets sold and we get cashed out, does that money have to go back into the solo 401k and IRA?
Yeah, so it has to stay inside of the solo 401k or IRA, but the money is tax advantage. And then you can redistribute that money back out to other investments. So, you have to make sure to contain the gain inside of the IRA. And I use the money market example again. You sell the startup just like you sell Facebook stock. A little different, obviously, but you sell stock. It comes back to the bank account inside of your self-directed IRA. And that is, again, sitting in your money market, tax advantage, ready for you to move out again to real estate or precious metals or crypto or another private company. So we have investors, they will do real estate deals for a few years. They'll hopefully have a sale. Hopefully they do well. And they'll say, hey, I'm putting this much directly into real estate, but out of gain, I don't have to pay capital gains on that. So I'm going to distribute that a little bit. I do the same real estate deal on a 2 or 3 year cycle. And then every time I have a gain, I distribute that to other different investments out there. I just want to say a little bit about Rocket Dollar. We have a discount code here for master passive income customers. Rocket Dollar, we try to offer this checkbook IRA at a much cheaper price. Sometimes it's up to a third cheaper than some of the competition out there. We try and do it the same way every time, just that IRA, that Colorado LLC in the bank account. I can talk about how you can, if you ever have a question about how that Colorado LLC works in a certain state, feel free to call me and how that would be structured. So for $360 and $15 a month, you get an IRA, an LLC, and a bank account relationship with a bank that are a partner that understands real estate and all these different alternative assets. So on the right here, you'll see kind of some of our competitors' fees, which can get pretty long and crazy sometimes. Rocket Dollar was started because we feel a lot of these fee sheets were too ridiculous, and they're restricting people from being able to invest in alternative assets in their IRAs. So with the Master Passive Income code, you can click Dustin's, make sure to click his link so he gets credit there on Master Passive Income site. But for you to get $50 off, you can enter Master Passive Income in the referral code box right before you get to our final purchase at Rocket Dollar. That'll get you $50 off in your account. And hopefully, I'd love if you had a conversation with me and Dustin, all the great education that he has. Dustin, thanks so much for bringing me on here today. It's been really great to talk about real estate, self-directed IRAs, and all these different types of other assets.
Yeah, Brandon, I definitely learned a lot, and I know everybody else is. And so for everybody, definitely click on the link in the description, masterpassiveincome.com/rocket dollar. But make sure you use that promo code, Master Passive Income. It's all one word, so that you can get that discount. But yeah, Brandon, it's been great. Thank you so much for giving us so much great information. Hopefully, a lot of people will be able to save money on their taxes, mitigate all those taxes, because Uncle Sam's going to take their portion, and we tried our best to not let that happen within the laws, and Rocket Dollar does a great job. So thank you very much, Brendan.
Thank you, Dustin. And have a great day, everyone. Appreciate it.